The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back with you. Gonna kind of cruise through the usual suspects here just to get you somewhat prepared on the major products that we like to look at every day to try to get the tone of what's going on in the world. Some currency looks, treasuries, indices, a couple of commodities. Going to go into some individual stocks with the scanner. If you've never joined the show before, that's kind of the general course of action that we do. We also at times talk about some option plays, some different angles on some how to attack and take advantage of certain situations. But in general, we use our profiles that we've developed in my company. Here they are. It's what we call fair auctions. I'm showing it on the screen right now. If you're in your car riding around, you can't see this, but catch a rerun of the show. Doing a webinar actually on this particular topic and how it relates to the scanner on November 12th, 6 p.m. Eastern time. Get signed up on the website. I think that's the time everybody can catch it. So that's kind of what we decided on. But, this scanner we've developed's got a lot of different moving parts in it. We want to explicitly explain, how to use it for long-term investors and short-term guys. So I think we're going to have a good time there, and I think it's going to be very informative. So we're taking a look at the euro. We've, been talking about this. We've been talking about, selling resistance, namely around that 115 area on the long term, and then we got a little bit of a rally back into that 113.52 area on the long term. Unfair highs, kind of had a failed attempt. Every time I say fail now, I think of Donald Trump. I mean, he's, personally, really, probably wouldn't get along with the guy, but he's shaking it up, saying things that people are afraid to say. I kind of respect him for that. But one of his claims to fame is he attacks people. Now he's going to attack Ben Carson and call him a low energy guy too, I guess. But one of his favorite words is failed. He failed. Well, Trump failed. They have 4 different bankruptcies. I don't know. I think he's going to have some issues with calling people failures. So the euro failed. The euro failed to get through some of the resistance areas. Never on a weekly close got above these profiles or fair auctions. And we talked about, combined with some fundamental news, that this was more than likely the best play out there is to just keep turning the wrench the same way on the euro. Whenever you're offered resistance areas, considering what the dollar looks like to me, it's about a 30-some% inverse relationship there. 30% of the dollars, I think it's the low 30s% of the dollars comprised of the value of the euro in an inverse relationship. And recently, this 113.52 unfair highs on the weekly was something we were paying attention to, and we were hoping we could get a weekly close below on the way down, not buying this unfair low at around 108.99, or let's just call it 109. Just using that as somewhat of a profit-taking event on the long term, waiting and seeing if we can get some more rallies to sell resistance or some breakdowns below that 109. So here's the daily. We always kind of start out with the big long-term weekly, as we like to call that, our long-term. And, just to give a little bit of history, we hadn't covered the euro. We covered I think the other day when I came back out of my coma state, we pretty much focused on the S&P, kind of historical, what had happened in a whole hour there. But the euro, we've kind of left alone. This is, one of my favorite trades out there. I did a Bloomberg brief on it on the short side a couple of months ago, and why that was going to be hopefully the eternal play on the short side. Still believe in that. But on the dailies, we got ricocheted off that 113.50 area, and then as you can see, we got that intermediate confirmation that it was really okay to step on the gas pedal. So what do you do now? So what's happened yesterday, and just to kind of stay in tune with, the profile looks that we kind of gauge this on, we reached a low yesterday, had a little whoosh sound getting through that weekly unfair low and the daily unfair low. So 109.45 was that daily unfair low. The 109 was the weekly. And you can see what happened when we started kind of getting some momentum through those areas. Now, the close yesterday on the so-called close, the currency seemingly never closed, but the print on the close, 108.63. What was that? 108. Where am I at here? Excuse me. 108.63 and a half. So now today we've rallied back up into 108.92 and a half. All right. So that's been the high. So we've kind of closed on a daily below that weekly. We haven't closed on a week. We closed below that 109 area, but we've gotten down below. We're retracing back up into it. So in my opinion, right now, looking at our navigator on our daily, looking at the weekly situation, we've kind of come up into the zero line and are starting to trail back off again. Couldn't get above zero on our navigator, going up into these resistance points. And that, when we eclipse the zero line on navigator down below, and go north of that, then we're looking at these resistance lines with a little bit of a suspect notion. That didn't happen. We've come up in the zero line. We're coming off again. This, to me, looks like it's not a buy support area on the euro. We could be wrong. Make sure your stops are in place. But as we look at this, I think it's a very attractive trade right now. It's been an attractive trade continuously off these resistance lines, as you can see on the long term, and using the daily to regulate that trade. What do you do now? In my opinion, you've got a span between 109. I know we've come down significantly, but you got a span on this retracement from 109 to 109 and a half, basically, in my opinion, to still look at this now, even though you've kind of taken off some weight as it's come down from 130. We've retraced 450 pips in a short amount of time on the euro. And as you can see, we hit that almost to the tick last week. I'm going to blow that up. The low print was 108.97. The unfair lows are 108.99. Came off of that. Again, that wasn't a bounce opportunity, in my opinion, to buy, but languished around. You've got a lot of things in your favor. It may be something you can look at today as a shorting opportunity in that span with stops above 109.50. But as we look at this, the weekly close is going to be very, very damning for the longs, even though we've come down a long ways in a short amount of time. And I need to look at the DIN. Here we go. Yeah, his other favorite word is fired. All right, here we go. So that's the deal in the euro. We're going to look at the dollar as it relates to that because, remember, equities reprice themselves and commodities do also. I don't have to tell you guys trade commodities a lot, especially in the DIN. Repricing, a lot of these are, denominated in dollars. So you've got to kind of keep your finger on the pulse of what's going on with these currencies. And as currencies change, they usually predicate, stock market shifts. So as we look at this and we look at the dollar, we talked about getting it back closed above 96, and then, where's the next level up? Nothing in the way here, no new profiles. We talked about that the other day. Again, one of those esoteric little things that, we probably will talk about, little innuendos in the webinar involving these profiles in the scanner. And by the way, these are all, noted in the scanner, all these levels and all these, red cells, green cells relative to what price action is doing relative to these profiles. We talked about, the profile being below price action. When we have a profile that prints or appears well below price action, that's extremely bullish. And that combined with the dollar, with closing above that 96, it's just, there's really no reason to take off longs on the dollar, as well as those shorts, in my opinion, on the euro right now, relative to what we've been looking at on profiles. We had a new profile appear in the past 8-12 hours on our short term on the dollar. and let me get to the right clock here. I was looking at the wrong clock. Okay, got about 3 minutes left. Thought we were coming up on a break. So as we look at the lower term time frames and this 240 regulating the dollar up, it's provided support areas even on a short term all the way up. So what do you do with the dollar now? In my opinion, you're going to try to stay with this trade on the dollar long. I'm pulling up the wrong time frame here. We pull up our 240 stops. You know, we got some support at 97.30 to 97.43. Those are going to be pullbacks to buy in the dollar, in my opinion. You've got a little bit of a short-term lid here, but long-term, guys, I see no reason to get out of the long trade on the dollar right now. Okay? Do you guys have any questions about what I'm talking about in the den? Please throw them out there. The number to call in is on the TFNN website, international and U.S. So I'm going to pull those up. Actually, Al's going to probably type them to me because I have a very short-term memory and forget them. 877-927-6648. Anything I'm talking about, please feel free to ask questions, and any type of instant analysis that you guys want on anything out there that you're looking at, feel free to ask. Internationally, 727-445-1044. All right, so let's go back to the yen trade, and let's kind of stay on the currency situation a little bit here. You know, we talked about this yesterday. In fact, we talked about getting above this 121 area on the yen. You know, it's been a nice intermediate little move up, but remember, you got major resistance on this yen trade, which I've been a huge fan of forever on the long side until we started breaking down. As you can see, I'm going to go back in time. We talked about this a lot, but you got big time resistance at 122.55 on the yen. Any weekly closes above there, that could be used as support. I'm not as super bullish on this yet until that happens, but I'm not a fan of going short the yen ever. Okay, well, as it stands right now. All right. So as we kind of go down the list, yeah, Tucker, I'm gonna answer that right after the break. I'm going to finish up here, but that's a good question. I'll be able to answer that. We're going to take a look. We got about 20 seconds before break, but I'm going to take a look at the treasuries really quick as we come back from break. We talked about that 127.11 area. That did not hold. That is what stops are for. And we're going to have to sit tight on the Treasury trade right now. I'm not a big fan of shorting Treasuries. We're going to talk about that a little bit when we come back from break, guys. And Tucker, I'll get that question answered. Stay tuned.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Finishing up with the 10-year and 127.11. I'm going to have to just pass on the 10-year trades right now. Not a big fan of shorting it. So just wanted to kind of get back up and clear some areas. And a lot of guys are, they're like, well, man, why do you want to buy things as they go higher and wait for them to go higher to buy them? Shouldn't you buy low and sell high? I'm a big fan of getting confirmations, especially around these inflection points that we talk about every day. And sometimes you just got to wait. You got to, a lot of people, okay, buy it. No, I'll buy it lower. If you liked it here, you got to love it here lower. That's a dangerous game to play, and that's all I can say. If you watch this show, I'm a big not proponent of the dollar cost averaging scene and throwing things into a investor bucket over there when things don't go against you, or then when things don't go your way. Okay, so somebody asked about the scanner. Are the charts you're displaying now in the software with the TAS Navigator box? If no, will they be at some point? Okay, so here's the scanner. It's got a kind of a multi-time. I'm going to pull up Facebook real quick here as an example. Obviously, this is a level of the market pre-market, and here's the weekly fair auction, the daily, the 240, and the 60. Okay, I'm sorry. We have a caller, and I totally forgot about that. France from Boynton Beach. How are you?
I'm doing fine, thank you. How about yourself?
Doing good.
Yes, welcome back. We missed you.
Man, that's nice to hear. It's good to be back, and I really appreciate that. I was going through a weird time there.
Okay. So, I wanted to have your opinion on gold. As looking at the price, 1107.60, the futures. I don't know why nobody's buying it.
Okay, so let's take a look at gold. Yeah, if I was willing to take a shot personally around the 1125 area, this weekly unfair high. I'm a big fan of long-term inflection points. I know if you watch the show, you know that. But right now, 1107. Let's just kind of take a look at this. So this is our daily. If you're watching the charts as I'm talking, you had 1141 as kind of intermediate support, and then you had that 1125 as big time support. Right now, down here on the intermediate and on the weekly, you really don't have anything to hang on to here except for possibly trying to pick another battle around this 1099 area. Are you a long-term investor in gold, or are you kind of trying to trade it, or what's your normal course of action?
I'm trading it, Just go in, get low profit, and head out.
Right. Okay. So I'm showing even lower term time frames at 240. I think right now we're trading 1107 pre-market. I think if you're trading it short term, 1099 could be something to play around with on the long side with stops below there relative to your appetite for risk, France. But it's kind of the back up the truck level is going to be at 1086.6. So you got an opportunity on the long side at 1099. I would, we're kind of in no man's land right here, to be honest with you. That's going to be the big number, and then you got even a bigger number around 1086.6 to kind of play around with that on the day trading side. The thing that I'd like to see, actually, I'm on my daily chart now, is I'd like to see a new profile attempting to appear. Now, if we can get to 1099, I just kind of think it's a no trade right now. If we can get to 1099 and we start seeing some hints of a new balanced area start to appear with that yellow bar, and in the scanner, I'm going to go to my futures section. I'm going to pull up gold. Where is gold? It's somewhere. Here it is. If we can see some hints of yellow peelback starting to happen here, we're kind of in the vicinity of the 240 unfair lows and the 60 unfair lows, but I'd really like to see some yellow peelback bars start to happen. As you can see, that's happening on cocoa on the 240, and at the same time, be around that 1099 area. I know I'm saying a lot of things right now, but sometimes you just got to sit there and kind of sit on your hands and wait for some high probability setups to happen. I just don't think they're happening right now on the long side.
Not in gold.
Not really.
And you wouldn't short it either, right? It's too late.
No, I wouldn't short it either. I just sit tight and wait for it to come into some of these high probability setup situations. Yeah. Well, France,
right.
Thanks. I hear the music. We got it. Yeah. Thanks for calling in.
All right. Bye.
Bye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Going to answer a couple. Thanks, friends, for calling in. That was a great question. I think a lot of people are, looking at gold, and maybe that'll give some sanity to it. Sometimes you just got to wait. And you know what? If gold goes up right from this tick, friends, sometimes we have to sit on the sidelines when a trade goes in our way and we're not in it. It's just I don't feel like you've really got a lot of probabilities there right now. The big number is the big number as the way I see it. And I'm a big fan of just kind of waiting. Sometimes it's very hard to sit in front of these screens and wait. I'm aware of that. So that's the way that goes. The 30-year. These are the big numbers on the 30-year. 152.21. That's the big one on the bottom on the long-term weekly. And then on the daily, this is kind of a similar situation to the 10-year and really kind of same premise as gold in my mind. I mean, there's not a lot to hang on to here. I'd like to see, and as I go into the 30-year, I'm going to go to our scanner. There's just no yellow peel back numbers happening here. Yellow peel back sells, just like we have there on feeder cattle in the 60-minute. You want to see a hint of a new fair auction, at least attempting to appear. Now, we're going to do a webinar on this. I'm going to try to go through as much as I can. If we have to do it for 2 hours, that's cool too. I love questions. I want people to know how to use this. It's very powerful. We've added a ton of new features in this. Going to have some hotkeys even that, are basically turnaround situations, big support stocks, strong resistance stocks, things like that. And if you can get a demo of this, I think it's going to be doing yourself a favor. So Terry, who was asking about that? Was it Terry? Yeah, Terry. Tucker, to answer your question about charts, I don't talk about this much because it's actually been in development for about 2 years. I'm going to flash this up here. We've got an entire charting package that we wrote. I own a software outsourcing company, and we've had people working. We're calling it DLP Trade. We're probably going to, we actually have it as Taz Markets. Right now we're kind of private labeling it for somebody. I've just got that version up. And this is the euro. So, this is a full blown, kind of actually access every instrument in the world on here. So if I want to come in here, and I'm going to get to answer your question in just a second. If I want to look at the symbol, I don't know. What's a symbol that's not on here? Even out of Mexico. Well, let's pull up, is Facebook on here? So I'm going to pull up Facebook, and I'm going to hit OK. And now it's in my grid here. It's got all my pricing. I'm going to go over here, add chart, blah, 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 daily. So you're going to be able to use this. You're going to be able to add the indicators on here. This is delayed data, and we've also got some kind of derivatives of the futures. So if I want to put boxes on here, if I want to, do this, do that, we're pulling all these indicators from the database that the scanner runs off of too. So if I want to come in here and, pop it out, put it on different screens, that kind of deal. There's back testing on here. It's just got artificial intelligence running consensus reports. You can pick out your own criteria, do this, it's a ton of features on here. So Tucker, this is to be rolled out at some point in the very near future as kind of a charting in conjunction with the scanner. So if you sit tight, anybody who has a scanner now, we're going to give them that included in the package. So I'm pretty proud of that. We've got a lot of money tied up in this and the development. So it's like on the precipice of getting released. So we can inside this, and the scanner will be embedded in the charting package. So you come in here and you click on a symbol, it changes the chart in the whole 9 yards. But we can put charts in here. The thing that we have done is I think we've done a good job of this, which is currently when you go into these breadth charts, you can get a price derivative of the S&P move. This is our 4 hour. This is our daily with the crossovers. These are our S&P levels over here. To day trade or intermediate or long trade the S&Ps, I think we've got a great package for you to use and some information there. I don't know if you need a lot of extra charts for it, but to answer your question, that is supposed to work in tandem with the scanner. And I don't know what else after that could be wanted. This charting package is very, very complete. Cool. Yeah, and we're going to be able to offer that for people who already subscribe to the scanner. So it's if you sit tight and people have the scanner, we're going to throw that in, and it's about, in my opinion, it's about 2 weeks away. So we'll talk about it in the webinar too. So let's see, what do we got to cover? We got to cover a lot here. I think we've answered the questions lately in the den. Yeah, looking forward to this. Been looking forward to it for 2 weeks. It's been a haul. There's a lot of moving parts in that charting package. All right, so let's cover a couple of earnings related stocks. I want to pull up Facebook really quick, and real time. Let's just go over here and find Facebook. There it is, and there it is. Voila. Here we go. So this is the pre-market price, the level of the market. Here's all the levels you need. But, there's nothing to hang on to up here. There's no yellow peelbacks. Obviously, the earnings. Let me just go to Facebook and pull it up really quick. All right. So, the history, the close above these 99.24s, this is our weekly. This, e-signal charts and everybody other charting packets. Most of these long-term bar charts don't incorporate pre-market spikes like this or aftermarket spikes. So here we go. So again, the price action's well above here. It was, okay to be long, not okay to be short this thing. I'm not a big fan of trading before earnings announcements like some folks. Not going to mention any names. Kramer. Oh, did I mention that? So, what do you do with it now? If you're long, I don't see any reasons to take this off. If you were a long-term investor with this, that's great. And you kind of suffer through those earnings announcements if you're on a long-term plan. But there is nothing to grab onto here on the short side. And is there support areas to use right now, or breakout areas to use right now in buying this pre-market? This is one, just like gold, in my opinion. You just got to kind of sit tight and wait for some new information to appear. We're talking about Kramer. I saw somebody, Tammy, say something in the den. We are kind of fiddling around with everybody wants to gamify everything with these apps. That's just kind of the way seems like the global world mentality is right now. They want to, what is that game that Candy? I don't know. I've never looked at it, but it's just everybody wants to sit there in their spare time and play games. So we're kind of meddling around with the trading game on the software programming scene. And, as somebody doesn't do well, they fall through the floor, and Kramer's head kind of eats them. It's it's just something we're playing with. Whenever I think of Kramer, I want to mention that. So let's take a look at, and that'll be a nice little game that you guys will have access to. We're just playing around with it right now. You answer questions, and you can day trade to kind of get your score up, answer questions to get your score up, take some risk on. You miss the questions, your score goes down. But you can always catch up your point level on the game day trading. But there's some cool features in it. Let's see. So let's take a look at Qualcomm. Talked about that on the show yesterday with Tom yesterday afternoon. All right. So, on turnaround situations, obviously this, had kind of broken up. I mean, if you look at this too, this is our weekly profiles, and we always talk about let's kind of wait for some confirmation. So we got that confirmation. The game was changing on a long term, getting back above 57.75, kind of okay to get back in the water. But guess what? We always talk about the yellow peelbacks in the scanner. Let me get rid of that. Talk about the yellow peelbacks in the scanner. That happened here. That was kind of a profit-taking event on the short side, because this has been a stock that has showed its hand as a weak instrument as the market has been edging higher here. And as the market sells off, when the market sold off, this was back in this, beginning of August area, weak stocks, the theory is, we talk about this all the time, in a market that's strong, you want to find stocks that are showing their hand on the weak side. And this one obviously was a good candidate. And look how fast it fell as the market turned back at the beginning of August. It's like shooting fish in a barrel. So, and if the market continues to rally, this is a stock that if you're short, it won't be as painful because it theoretically won't rally. So we had the turnaround. The yellow bars, the market started kind of changing tune end of August, end of September, beginning of October, and then really cleared long-term profiles for the first time since, what is this, spring of 2014. So this is kind of a big sea change event for this particular stock. We're still sitting above profiles here. 57.75 is the top of that situation. We're trading 57.50. So, what would I do with this right now? I think you've got a buying opportunity on Qualcomm. It's pulled back to major inflection points on the long-term weekly and daily. I think you can take a shot here. And even though, the earnings situation wasn't as rosy as it needed to be, you've got pretty good support here around 57.75, 58.12. All right. Now, why do I say all that? Let me pull up Facebook, FB. Okay. Level of the market. Let me see. Oh, I'm sorry. God dang it. Qualcomm. Coffee. Okay, so see, we're kind of back into this area right here. I think we're trading a little bit of. Let me go back to my chart here. we go. So 57.50, 57.75, 58.12. You got a little bit of an opportunity here to play around with this, and the scanner's letting you know we're right in that vicinity of the weekly and daily unfair highs. Any closes below all this today on a daily, I think you're going to have to sit tight and wait. But right now, we're kind of in that noisy neighborhood of these two major inflection points lining up on Qualcomm. And these are still showing green because these pre-market, this is based on our e-signal weekly and daily numbers coming out, and that's not being reflected in that right now pre-market. So, okay. All right, let's take a look at something else. Kors, K-O-R-S. Yeah, Terry, the charts that I'm showing are on e-signal. We've got our indicators, by the way, in about 8 or 9 different charting packages, the Ninja Traders of the world, the trade stations, the Open eCry, which a lot of firms private label. What else do we have it in? Drawing blanks here. We're trying to put it in Thinkorswim, but man, they've got some weird things on their standard developers kit that we can't get through. So I apologize for that. Let me go to our website. I'll pull up all the charting packages that we have it in. Trade Navigator. There's a couple other packages. Let's see. Okay, Kors, K-O-R-S. Okay, so pre-market looks like 42.70. Let me make sure that's right. 42.70. Okay, so had a little spike up into almost 44 and a half on the announcement. This has kind of been on our crappy list forever relative to profiles. The scanner's just been relentless on picking this out. In my opinion, it ain't time to buy this particular stock unless we get a close above 44.02 on the weekly. Then you can start thinking that there might be a sea change, but this stock can't really get out of its own way. It's still a dog of the entire universe on the S&Ps. And you saw when we had the sea change back in July 2014, getting below profiles, it really hasn't. And we've been able to use resistance points all the way down. It's still, turn the wrench the same way. It's still the same case. So Michael Kors, I'm not impressed with the little blip on the screen of getting back up into the 42.70 area. So if that makes sense. We're going to take a look at Time Warner, another stock that had earnings yesterday. When we come back, Rig, Chesapeake Energy, a couple other stocks, and we're going to take a look at the scanner for some new opportunities. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Yeah, Russ had a really good question. He was noticing on the scanner some peelbacks on the on Qualcomm on these situations here. If you'll notice, they're red cells. That's absolutely what's happening. If we go to this particular scene right here, that's really the level of the market. We're using that, as the actual price all the time. It may be sometimes 60 to 130 seconds delayed. We're just compiling so much data, and we kind of refresh this every 60 seconds. But we have to rely off some e-signal closing situations, like right now, for instance, and this is on a lot of charting packages. I'm not speaking very clearly this packages. The price of Qualcomm is 57.50, but if you look at the daily, and these are e-signal charts, daily right now shows close 60.26. So that's the daily close yesterday. It's not reflecting pre-market on these stocks, but on the futures, the dailies do reflect actual price pre-market on the dailies and the weeklies. So we're just trying to let this thing catch up. It's not exactly, pre-market sometimes what you want to see based on some of the e-signal outputs. So, but the futures is a different story. So we're kind of at the mercy of our data vendor on that one, Russ. Okay. You guys are making me hungry in the den. That's not a good thing either, because I'm a notorious eater. Here we go. Let's take a look at the S&Ps. We got to hit this. Hadn't talked about this actually at all. Getting above, if you hadn't watched this show, getting above 2045 and weekly close and retracing back into there was and the breadth being positive on our scanner across the long term, and you go in here and kind of look at this long-term breadth, both are positive long-term. Any retracements in a 2045 from above to be looked at as primary long-term support. So those are my thoughts in a 40 to 50 page Word document, if-then statements. Now on the short term, we talked about yesterday, the 60-minute did roll over a little bit. Short-term traders had some opportunities there. But right now, the long term is the breadth, the weekly and daily breadth is still relatively unchanged. You are definitely trading against the trend, and we always try to trade with the trend and find support when the breadth is positive on long-term inflection points and shorter-term inflection points to try to trade these S&Ps from the right side of the market. And what it basically does, it tells us on the long term and the intermediate term, we want to try to block out one side of the marketplace by looking at that breadth. And we're going to get deeply into this on the webinar. We're going to, also kind of pair this relativity of the VIX with this too in the webinar. But, right now, we've talked about it. It's you're playing with fire on the short side, basically. And there are some short-term opportunities, but right now, there's not a lot of indications to back the truck up and get short. So the inflection points to pay attention to today are 2096.43. And here's the short-term 60, 2099. So, what do you do with this? I don't think you short it. You can try to find some support areas. You've got a little bit of a short-term range between 96 and 99. Play stops below there, but you've got a bigger support area at 2077 on this. Guys, you've been great. I'll be back tomorrow. I think they're going to do a replay next hour. Larry's still having some issues with his voice, so stay tuned, and we'll see you again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.